Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, the not production guy, my brosif Joshua Ryan Rusin, the community director of Jake and Gino. Josh, how you doing today, bro?
Gino, doing well, man. Excited to be here. Excited about a lot of things in the works we have and really just making it happen with the Jake and Gino community. Gino, how are you today?
I'm doing better than you, bro. My lighting looks good. I mean, your hair is looking good today, I got to say. Look, you're looking really good today, but I'm doing great. I mean, it's the middle of summer. I was at the beach last night. I can't complain. A bunch of calls. I was complaining to our guests this morning, but you know what? Communication is key, especially in real estate, and team building is key also, which I think we're going to jump into today. So I'm excited about today's call.
Yeah, speaking of that, today's guest we have. So like many who discovered real estate investing midlife, Branton found himself squarely entrenched in the E quadrant at the age of 37. Having spent close to 2 decades becoming highly specialized within the military and federal law enforcement, what for so long had been the goal now became his greatest challenge. Passionate about untethering himself from a single source of income and short on available funds to invest, Branton immersed himself in real estate podcasts, books, and local networking events while finding creative ways to leverage the skills acquired from his law enforcement career to the real estate investing realm. Discovering Jake and Gino's Wheelbarrow Profits platform in early 2018, Branton knew multifamily was the greatest way forward. Branton is the founding principal of AOM Enterprises, focused on acquiring and stabilizing value-add multifamily properties throughout primary and secondary markets in Texas. He and his 2 business partners recently completed a full reposition of a 16-unit property in North Texas, successfully implementing all stages of the buy right, finance right, manage right process while overcoming the many challenges of investing remotely. Branton currently resides in Las Vegas, Nevada with his wife and 1-year-old son. In addition to family life, W-2 job, and a military reserve duty, Branton works tirelessly to scale AOM Enterprises holdings in an effort to reach his goal of matching his W-2 salary from passive sources by the close of 2020. Welcome to the show, Branton. How you doing today?
Good. How you doing, guys? Excited to be here.
Doing well. So let's talk about this. You have an interesting career. So you got in the military and you got in the law enforcement. Let's tell the folks a little bit about what you did and then how did real estate pop into the picture?
Yeah, absolutely. I was going the conventional path, out of high school, right into college. And I was in Army ROTC during college to help pay for school. And I took a semester off and I joined the National Guard, went to basic training and military police academy, and came back out and, I was putting things together. I wasn't the best student in college. I knew that I was supposed to go to college, but I didn't really know what I wanted to get out of it other than you're supposed to go to college. And, and that's an expensive way to figure things out sometimes, but, and then timing is everything in life. I graduated basic training and military police school 6 months before the September 11th terrorist attacks. And so shortly thereafter, I was deployed out of college with my unit when we were mobilized and called up under Operation Enduring Freedom and Iraqi Freedom. And so I spent a majority of the next decade on active duty, mobilizations, deployments, things like that. Through that, so really since age 19, I've never really owned my own time. And that was something that I didn't really realize until maybe, the rich dad, poor dad moment that we all have at some point in our life. And specifically between the military and the federal government, which is the epitome of being an employee. It is get in, spend your time. One of the last pension programs in the world that everyone's really mentally tied to in the federal government and the military. Extremely proud of what I do. Got into law enforcement, got into criminal investigations, and have spent the better part of the last 18 years in those two capacities.
Brandon, so let me ask you this question. This is important because we have a lot of military, a lot of active duty police, fire, first responders. What is that mind shift going from that stage of your life to becoming an entrepreneur? Because that's what multifamily investing is.
And I have to tell you, it was an evolution. It did not happen overnight. I mean, you read something like, at least for me, it was Rich Dad Poor Dad, and I had already started. I had never even heard of that book, which is one of those frustrating things where you start reading all these business.
How old are you when you read it?
Just about 2.5. I was like 37, roughly.
Wow.
And yeah, absolutely. And so it was a total paradigm shift. It was a completely other way of thinking about income, expenses, running your personal balance sheet. First of all, what a personal balance sheet is, and looking at money like it's a business in your own personal life. And
wow. So this is important. I don't mean to cut you off, but I want everyone to realize this. It's truly important, your environment. Now, there's nothing wrong with being in a military environment or being in a pension environment or being with a union or whatever. That's fine. Just realize that they resonate and they think differently than an entrepreneur or someone who's looking for financial freedom. If you crave that, you need to start surrounding yourself with like-minded people. That's why the Jake and Gino community is really important. That's why reading Rich Dad Poor Dad is really important. That's why reading Napoleon Hill is really important. Right. That's why just surrounding yourself with like-minded individuals or what you want to achieve is truly important, because I know Branton was probably in the military police and he was around those people and they're saying to him, "Are you crazy? I mean, you got another 3 years, stay with your pension and you'll be okay." And Branton is probably there with the struggle going, "But guys, I've read this book. This thing is amazing. It's blowing my mind. Our time is our most important resource." I mean, people are counting down to retirement. They don't understand they're counting down their life to get a stupid pension or pay, which is not, I don't mean it to be stupid, but you're really counting down for the $50,000 or $60,000 a year when you're 65 or 66 years old. Whereas if you look back and you can reclaim those 5 or 10 years, that money is priceless, because you can have those memories and those experiences with your family when you're younger, and you can reclaim that. So I want to hear your paradigm of what happened when you did that and you left that and you started surrounding yourself with other like-minded individuals.
It is exactly that. And like I said, between, specifically the military, the federal government, it's such a structured environment. The framework is, is just, get in the door, you get the coveted position, the pension, it's literally paragraph and verse right out of the Rich Dad Poor Dad. I mean, it is safe, it is secure, the paycheck shows up, everybody just gets in the door and pretty much just talks about how much longer do you have until you're 20, your pension. And what never sat well with me, and I can adapt to any environment. I've worked in a lot of different environments through the course of my work, but I can be a chameleon in that perspective. But there was always part of me thinking, but where's the return on investment here? Don't you have any goals between now and then? Mm-hmm. Or okay, great, you're 50 at the earliest and you can retire, and then what? And that's where, when I read some of Tim Ferriss's stuff, it really resonated with me. Stop deferring all gratification in life until retirement, when you don't know what your health is going to be, when you don't know what the cost of living is going to be, and you're now on a set income and you don't know what the cost of living is going to be. So a lot of that really resonated with me, and it really hit home. So when I read those books, it was a huge, I basically didn't bring it up at work because it was the antithesis of, being efficient and creative. Those are the words that you don't come across in the federal government. So basically all things that make you a good business owner and entrepreneur are, you don't really come across many of those traits in my line of work. So, and that's not a dig. It's just, it's the reductionist theory, right? It's all based off of how can we plug and play humans and still get the same job done. We're going to write the task lists out to how to do every job in the military. It's going to be a checklist, and it's not human specific.
So there's nothing wrong with that, Branton.
No, there's nothing wrong with it. But when I found myself constantly bumping up against this thing where I was like, I think this can be done better. I think it can be done with less resources. I think it could be done cheaper. And that is not the mindset that they encourage. They said, we want you to think outside the box as long as you execute it exactly how we want you to execute it. Like, it doesn't really.
Branton, what I want to know is, so 2.5 years ago, you read Rich Dad, Poor Dad, you get
Absolutely.
the theory of having assets that produce money for you. How did that go from that to multifamily? Walk me
Absolutely.
through and why multifamily.
Yeah. So I had a couple friends who were like-minded, close, that were in my line of work, that I shared it with, and I said, hey, read this book. And I said, but I'm going to warn you, there's no going back. You can't unread it, And I get a call from a friend of mine who's now one of my business partners. And he's like, I'm furious. He's a couple years older than me. He's like, I'm furious. I'm 42 years old. And I can't believe there was this whole other side out there. So we started talking about ways to get into it. At the time, I had not found Bigger Pockets, Wheelbarrow Profits yet. I found Bigger Pockets. And that was the whole thing. Well, it's something that I can do for additional income on the side, around my W-2 job. It doesn't have set hours. The more you put in, the more you can make, things like that. And, I like Bigger Pockets, but the problem is it's like the rabbit hole of Amazon reviews. I mean, there's like, it's just, there's so much content. You have no way to verify the source of the information. Everyone's got an opinion. And so you can really get stuck in that fray for a while. And so I moved forward, did some podcasts, read a couple books, the BRRRR strategy, the buy, rehab, rent, refinance, the whole deal. And I did a single family home and in Tacoma, where I was living in Seattle at the time, and worked with wholesalers, was going to meetups, that whole thing. And so kind of immersing myself in that environment and outside of work. And we picked up a single family home to run down that, to kind of get our feet wet. And after 6 months, I was like, okay, now I have one door. And this is not scalable, at least not with the, with the time and the resources that I have to put into it. So then it was kind of a reevaluation. And during that repositioning of that house is when I came across Wheelbarrow Profits. I read your guys' book and I said, okay, same process I'm doing on the single family home for all intents and purposes, but it's scalable, and I can do it out of town. There's tax advantages, and all those kind of things. So that's really, I immediately started to transition, looking for markets that I did have a couple limiting beliefs, did not know, it was all in my mind, all based off of personal capital. How much can I afford? So then you end up in this kind of chasing your own tail of deal chasing. You're not looking at specific markets. You're looking for, okay, I'm going to set up a nationwide search on realtor.com, and I'm going to, and that's tough because you're not getting integrated into any one market. I mean, at some point when you're new, you have to just get involved. But went down to Texas, and landlord-friendly laws, or more so than Washington State. I was down there visiting family and started looking at, a small town outside of Dallas, Fort Worth, Wichita Falls, and there's a military base there, low cost of living. And after a year or two of trying to do it in Seattle, it was nice to go to a place where there was no investor pressure, none whatsoever. And that's because it defies many of the metrics that we look at in a market. There wasn't, it was relatively stagnant. No population growth, no employment growth. But it was a good place to get started. I was real big on I want to be able to have proof of concept to myself prior to going any further into this, so that I feel confident.
How did you find the deal? Was it through a broker or? Yeah,
it was actually, I'd set up search functions it was on the MLS. It popped on the standard MLS. A lot of the smaller towns, they don't even know what LoopNet is, and they don't know what a cap rate is. And it's really funny. Literally the commercial banker didn't know what a cap rate was. I asked him about the market cap rate. I was trying to take what I had learned in the Wheelbarrow Profits stuff and apply it. And it was really funny because I was talking to a commercial banker and I said, what's the local market cap rate for C-class? And he was like, we don't really use cap rates. I'm like, somebody in your process uses cap rates. I know that. So I ended up having to ask him, who does his appraisals? Who does your commercial appraisals? And I just got in touch with a local appraiser who had the information.
So it's funny you say that. We had a student last week call me up and say he's putting a deal on a 16-unit property in Jacksonville. And he asked the broker, can I put an LOI in? And she said, what's an LOI? And I did the same thing. They're like, we're going to need a purchase and sale agreement. I'm like, okay, if you want to go 17 rounds on a PSA, that's fine. I'll negotiate. But it's really funny. You're 2 hours outside of a primary Texas market, Dallas, Fort Worth, and it's like you might as well be in another world. But that's because they're mom and pop brokers, and everyone out there has to realize that you need to become educated like Branton did and understand the process, and then you will look like the actual expert. And I'm sure they didn't even ask Branton for proof of funds because they don't even know what he's talking about when it comes to
No, they asked me what lender I was using, and I was using a hard money lender to do a value add, a heavy value add, kind of a bridge loan, 12 to 18 months. And they were like, well, we've never heard of those lenders. And I'm like, well, that's because they don't do 30-year fixed mortgages. I mean, it's not the route, So yeah, you're absolutely right. It was a conventional brokerage, small local, a Remax affiliate or something like that. And so it was, and you have to be careful. You don't want to walk in as a know-it-all. You have to, you still need to have buy-in from these people, and you need to network and, be genuinely involved in the process. But through that, you can educate them a little bit.
What was the value on the property? 16 units. How did you get value?
It was right out of your book. I mean, I had listened to your podcast at that point. I had read your books and some others in the same realm, and it was right off the bat, right from the photographs. Listing photographs were blurry, not just listing photographs, but you look it up on Zillow. There was zero online presence. I think there was a Craigslist ad. It was blurry cell phone photos from it looked like it was taken with an old flip phone. That's how they were advertising. The paperwork, as soon as I asked for some of their paperwork, it was a total mess. I mean, I was confident they had no idea what was going on at the property, which makes due diligence hard, but there's your value add, you know what I mean? Because they don't know what it's worth either, or potentially worth. I liked it. It's in a transitional neighborhood, but it's on the edge of it. It's on the downtown side of it. And so I was less concerned. It wasn't, blocks and blocks into a rougher neighborhood. It was across the street from the city hospital, which employs several thousand people. So we had an economic driver there. And it's 5 miles from an Air Force base. So I felt, it wasn't 250 units. It was 16. And I didn't feel as though I needed to worry about the overall huge market drivers as you would if you were looking to scale in a specific market. We wanted to get our feet wet. It was listed at $299,000. I right off the bat, I had already looked at other properties and knew what the rents were roughly. And so I knew that conservatively $500 a month for a one bedroom efficiency was good to go. And their rents ranged between $375 and $450. They had no idea who was living in the property. They had a couple leases in place, but for the most part, it was a mess. It sounded like a lot like your guys' first property. I mean, there was a lot of drugs. There was a lot of, non-responsive management. So they didn't know what was going on, and tenants exploit that.
So what did you end up buying the property for?
Got it for $272,500. There were 5 vacant units, which was another value add at the time on paper. And that was we'll talk about that in a minute. But so the goal was we bought it on a 12-month hard money loan, which included $25,000 worth of rehab. We were going to do a $3,000 to $5,000 rehab on these units. Were pretty gross. I mean, they had carpets in them from like 1975, smokers and everything else. They were pretty rough. So they were livable, but not to the tenant base that we would ultimately shoot for. So
I'm looking. You're looking at about 15 to 18 a door.
Yes. Yeah. So we knew that $25,000 to $27,000 a door, a couple blocks away was
easily, because everyone on the call, listen to what he's talking about. If you can get the rents to $500 a month, that's $6,000 a year, and you're into it for 20 a door, that's a 3.5 year payback. That is like 2013 numbers. So that is he's limiting his downside on this deal, and he can always get those rents up. And on the units like that, they might be a little smaller. So even if you have to put $5,000 into each unit, into all 16, that's $80,000 of capital. You're still into the sub $20,000 per unit. You're going to have at least $5,000 to $7,000 per unit in actual gain on that. Is that correct?
Yes, and that's really where we were. So
perfect, dude.
Yeah, it worked out well. A little bit of the spiral, what we in the military we call mission creep, where you started with one intent, and then you're down the road, you're really far from why you originally entered.
Brandon, that sounds like my wife. I'm going to give you a perfect example. You know what? Let's rehab the house a little bit. Let's do a little paint. You know what? What about the cabinets and the countertop and the floors?
Yeah.
So you're looking from 20 grand, you're looking, that's like expense creep. That's what Jake and I call revisit every year. So it's not just the military, it's everything. So
no, and you have to protect yourself against. And then, by the way, I did a lot of DIY work. I swung a hammer for my dad's construction company before I went to college. And so I can be my own worst enemy. And that's one of the reasons I invested out of state, to protect myself.
Yes. Great point. But there's nothing wrong with that, Branton. Actually that expense creep on your first deal, because that's a learning lesson, because every newbie investor, including myself, you should see the first property we did. We did a fourplex back in 2002, my brother. I made these great walls of China. Instead of putting railroad ties, I spent 50 to 60 grand in retaining walls. I'm an Italian guy. You know what I mean? You should have seen the cobblestone. I'm like, dude, my father was at the time. Am I living there?
Really, right, exactly.
No.
And you have to understand that at the end of the day, what are the people that are going to live here going to get?
Yes.
And if they're not going to appreciate it and ultimately pay for it from a business angle, it's not there's no return on investment. Yeah,
I definitely agree with
photographs well, but that's unless it's your model home, it's not really So absolutely, and so we went through the due diligence. We did the couple of things we did not do as well as we should have. We went on site. We knocked on every door. But it was a scattered. It was as far as like a lease audit, very hard. They had no paperwork. They had maybe one applicant had an application because she had lived there for 32 years. God help her, that property. But other than that, there was no paper trail. It was really very hard to And when you go to a lot of these mom and pops are smaller, and you say, well, I'm going to need your, I want to verify income with your bank statements. Well, they're commingling their funds. They're not going to give you their one bank statement for their property management company. And they looked at me like I had three heads when I asked them for their bank statement, like I was asking for their social security number. So you just have to know how hard to push and then decide if you're willing to manage the risk. And that's something that, based off my career in doing other things, that you want to do 10 things, you have the resources for 3, you need to effectively pick 3.
And that's why you paid $15 a door. I mean, that's really why. So if they're hard to work with, there's a lot of risk involved. So the more risk involved, that price is going down. And you really need to get at least the last 3 months of bank statements. And you can convey to the real estate broker by saying, hey, listen, you can black out all the numbers. I just want to see where the income is going into. I want to make sure that they're collecting rent. You can give me a rent roll schedule of the 16 units. There's $500 or $400, and it'll total up to $5,400. Let's say, I'm giving a number. And then is that $5,400 actually going into the bank? And then you need to know that. And then you need to say, I'm paying such a great number. Only $4,200 is going in during your due diligence. Should I still close on the property? I would say yes, because at that number, you're going to have a lot of loss to lease because you're really under rented, and you're paying such a low number that's part of the risk. Now, if you're paying $22 a door, you're saying to yourself, you know what? There's only $3,000 or $4,000 of upside on this property. Am I going to do that? I'm not taking that risk. You guys,
and that can get eaten up real quickly with a couple, a couple contingencies.
Yes.
And that's what we had. Is we didn't have a huge. We scraped everything together for the down payment, and we knew this was a solid investment to get in the door. If all went south, it was still under $500,000 property. And so you can recover from that given complete failure, and at least on your first deal, it's worth considering. You can't always think in those terms, but at least on your first one, there's no way kind of not to,
I love that.
Right from day one though, the as-is appraisal came in at 325. We had bought for 272.5. So that was comfortable. And the ARV, appraisal based off of the renovations of those 5 units brought up, leased up at market rent of $500, came in at 425. And I had already, and running the numbers, I knew that our target to do a complete break-even refi was going to be about 525. And so that 425 number was huge because that was based off of a renovation of a third of the units. And so, or a quarter of the, so I was really excited when that first appraisal came in, because I said, it is not going to be a heavy lift to get from 425 to 525 after a full renovation and reposition. So that was a huge first step. That was exciting. Couple things that we did not predict, should have predicted. Now we always will assume and have more reserves. You start paying attention, you shine the proverbial spotlight on a property, half those tenants scatter, so we went from 5 vacant units when we closed to 9 vacant units, I think, in the first 45 days, by no work of our own, other than we will call the police. We're going to have contractors on site that are our agents, for lack of a better term, and they speak for us for all intents and purposes. And all of a sudden people started to disappear. What
They're
that
doing you a
presented,
favor. They're doing you a favor.
it absolutely,
right?
We all, and they were paying, who knows what they were paying. They weren't really paying rent anyway. They were just living there. So it was get out of here. But that said, what we didn't have up front were a bunch of reserves. So we had planned our rehab budget based off 5 units plus a little. And now we've got to come up with the money. It speeds up the reposition. But the flip side of that coin is that you now need 2, 3, 4 times as much money to do that. Otherwise, those things sit unrenovated.
Mm-hmm.
So, personally, to all those out there that are scraping together to get into their first deal, have a line of credit. Have something that is free liquidity until you use it. Don't get a giant loan because you're paying on it whether you're using it. But have a line of credit, whether it's unsecured personal for 20 or whatever it is, so that you have some reserves. Because
I love that.
Do those extra 3 or 4 units quickly, that's where that money's going to come from.
I like that.
We scraped that together. We use our W-2. We were lendable from the bank's perspective because we did have good, secure, federal jobs. So that's always a good thing. People that say, I'm going to quit my job and get into real estate, maybe hold on to the job. It's good to show some steady income during the process until you're transitioned out. So we renovated. We're all in now we've renovated 14 of the 16 units. We held over 2 good tenants that were there, and we're into it for about $140,000 at this point. But in May, we were able, which was the 9-month mark, we were able to do a cash out refinance. And the lead up to that was starting from day one. We organized the contractors. We had a great contractor. We got really blessed with a contracting crew, especially when you're investing remotely. You can rely on a team of people, a combination of people, but you do need one set, or at least one set of good eyes and ears that you feel comfortable, because you're not going to fly. If you have a job and a family, you're not going to fly down there once a week, nor should you necessarily. Sometimes you need to let the process take its course, but you need to make sure it's being managed, from a project perspective. So, and that there's progress. So he treats our money as his own, which is the best you can ask for in a contractor. And his craft is good. And he's got ties to the local community, which if you're in a smaller market or a sub-market, get a contractor that's been there for a while, because they're going to have lines of credit through their own business. They're going to recommend local bankers. I started calling bankers that were recommended to me by my contractor. And that's where it started, and kind of pulled that thread. And I was talking to the local community banks, and this was something to where I immediately knew with the expanded scope of work, we were going to push up very quickly against our 12-month timeline on this line of credit. Or the hard money loan that we purchased it under. So, and it was going to get very expensive past the 12-month mark with fees. So I had already started, but I also knew that the property wasn't going to be stabilized by the 12-month mark. That 3 to 6 months worth of stabilization period. It would have, we only done the 5 units, but we were now deep into 12 units. And already at the 7-month mark. So I had already been taught, I knew I had to go the local bank, local lender route that was going to maybe forego the stabilization period, because they knew the community, they knew what we were doing. You had the opportunity to put yourself in front of them, and they landed on the character of the borrowers, which was nice. Because they have local decision making. I mean, Thursday nights, 6 of them get together and make a decision on the loans applications, and that's the exact environment you need and want when you are not where the property is basically not where it needs to be to go out and get a really good, debt service on it. So yeah, they forego not only the stabilization period, but they did an additional as is, and then ARV, and then they basically held the difference in an escrow account. So we don't have to do a streamlined refi to access the additional funds. We can just show them invoices and proof of work. They come over, they drive over from the bank, they take a look, and they let you pull the money out of escrow to basically replenish and refund. So it appraised at $595 at the 9-month mark. So
you have a couple $100,000 of equity in this thing now.
Just under doubling the value in 9 months, which is the power of commercial real estate. I have owned and rehabbed a lot of personal residences. It's very hard to double the value of a home because you're tied to the local neighborhood.
I love that. Guys, let's take a quick break to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
Branton, man, that deal is powerful. I love the details of the case study you went through there. You know, what I want to do now is talk about some short answer questions here. So, what's your next step in multifamily?
We're looking to scale. We've got this under our belt. We did it with our own money. We wanted proof of concept for ourselves. We wanted to take, as Gino says, take our lumps on the smaller deal, set up our internal property management. We've been using, we went through a couple different platforms to figure out how we wanted to manage the property, learn the ins and outs of that. And we are now looking to scale into another Texas market, a secondary market that is going to be stronger, that's got some of those strong market fundamentals, and maybe not a pure, true syndication, but definitely bringing in debt partners so that we can, as a force multiplier, so that we can get into bigger deals and so that we can scale.
That's awesome.
Yep.
Love it. What about your best advice for anyone trying to buy their first multifamily property?
Yeah, I would say get started and persistence. You can read 1,000 books, and at a certain point, you're no longer mitigating any risk. The more, you're just reading the same information over and over. And I think that if you've read Wheelbarrow Profits and you've read a good, maybe due diligence handbook for commercial real estate and loopholes of real estate taxation and a couple of those, running your own corporation by Gary Sutton. If you have the fundamentals of your entity, your taxation, your due diligence, and your repositioning of a multifamily, you have what you need to move forward. It's time to move forward. And so I would tell people to get off the sideline after a while. You can listen to 5,000 podcasts. You can read 100 books. You're not getting any closer to owning that first deal. You don't want to go in unprepared, but at a certain point, you're making yourself feel better, but you're not actually getting any better at the process.
Josh, do you hear that? It's commit, then figure it out. That's what Branton's saying. Every book that he's mentioned there, I've read all those books and then probably 100 others. And I've never really listened to podcasts, but really reading books and, listening to others who are in the space, who've had that experience and who've done it before. And I'm really huge on the community aspect of it, because I think if you can surround yourself with other people and partnering, what Branton did, I love partnerships because it holds you accountable. I mean, when you've got to get something done, you've got to get due diligence done. Your partner's like, did you do it? And you're like, no, that's not going to happen when you have a partner. They're going to push you to become better and to do it better. So it's really, that's the other thing when Branton's just said, get off the sidelines. Well, if you're by yourself on the sidelines, it's pretty hard to get off the sidelines sometimes. But when you have partners and coaches and mentors telling you to do it, there's more, I guess, sense of urgency to do it. So I think it's really important what he said about that.
Well said. What about your favorite book? Given my background, I'm a little bit of a leadership junkie. Having experience, as we all do, you learn more from bad leadership than good leadership. I think a lot of the time, because you come across it more often and through the course of your career and life. And I think that one of the books that resonated with me, especially in real estate, actually, and investing remotely, is a book by retired General Stanley McChrystal, who was Joint Special Operations Command, and he really wrote the book on organic team structures and being able to operate faster and now retired, he consults with companies to remain relevant in the marketplace. Mm-hmm. Interesting transition coming from the military, and so his book Team of Teams is literally about decentralizing your decision making, putting the right people in place, and then allowing them to make decisions on the ground, because you will be more effective. They are more involved in the environment, and I think that carries over to the real estate environment when you're investing out of state and dealing with resident managers, property managers, contractors. You put the right people in place, and then you at some point have to allow them to. And it's really a study of systems. And one of the quotes from that book that I really like, he says, "Accept the inevitability of unexpected failures and build flexible systems to combat the unknowns." it's going to happen is what he's saying. And if you have the right people in place that are competent, they'll make effective decisions on your behalf and the process will go okay. But if you try to wire it so tight, you're going to go off the rails at the first thing that goes wrong.
And if you have the right mindset, and if you have the right big enough why, because if you have a big enough why and something goes off the rails, you can get back on the rails. But if your why isn't strong enough and you're doing it part-time and it's, hey, just trying to create a little income and it's going to go off the rails and it's not going to get back on the rails. So that's important.
Absolutely. Yeah. So that's definitely one of my favorite books. It definitely looks at understanding what true delegation means and staying out of the micromanagement side of things.
Love that. What about best habit for success?
Yeah, I think I'll throw one out to Grant Cardone. You had, like, whether you call it your why or what, you got to be obsessed in it. Especially if you're holding down a job and a family and you've got a lot of other commitments and you don't just have 40 hours a week to spend doing it. You need to be obsessed with reaching your goals. Set your goals and then really kind of stay obsessed, because when you get tired or you're wondering where the next chunk of money is going to come from, it's that's going to carry you through. So it's not a specific habit, but I think stay on top of it. What I do when I'm starting to feel, a little like that, this is never going to work, I hop back into the community. I listen to a couple podcasts and it gets me fired up again. And so I think you can't allow yourself to drift too far off track.
I love that.
Love that. Gino, before we wrap this one up, you want to extract some of the golden nuggets that were dropped today for the listeners?
I love the mind shift. And one thing that really struck a chord with me is when you become an entrepreneur, it's the I'm a mentality, right? I'm going to do this, I'm going to do that, because you have to learn everything. But as you start scaling, like Branton said, you become a leader, you have to let go of that, right? And there's your ego saying, you know what, I need to do everything because I'm better than everybody else. But if you're a true leader, you're going to know how to hire the people. We didn't mention the word culture throughout the podcast, but culture is really big and it starts from the top, right? So if you can actually learn what you're doing, and then start managing and delegating certain responsibilities to certain team members, that's going to really be able for you to scale up a business and to create a true business from multifamily or from whatever kind of venture you're doing. So the entrepreneurial journey is weird because in the beginning, you start out doing everything yourself. And then as you grow, you need to start delegating that. And that's where I got stuck in my journey. And that's where a lot of multifamily investors get stuck. They've got the 16 unit and you know what, let me go another 12 unit, another 5 unit. They don't think about getting a 30 unit because it might be too much work or they can't figure out how to do it. Partnerships will help with that because they'll help you with the capital, they'll help you with the time, they'll help you with the delegation of responsibilities. And you have 3 sets of eyes looking at a deal instead of 1 set of eyes. That's really important also because you all have different skill sets. So don't be afraid to partner with somebody else as long as they have your basic core integrity, core values that you have and your core objectives, where if you're looking for fixing and flipping and the other person is looking to buy multifamilies, it's not going to work. Be on the same page. Don't be afraid to partner. Be open-minded, worry about the communication, and have a clear set of goals and objectives. Branton went into it knowing that his downside risk was limited. If worse came to worse, he could still sell the asset at probably break even after doing all the work. But seeing that he had a goal and he had an exit strategy in mind, he had the right debt on this property. He did a lot. He educated himself the right way. This is a great, as he said, proof of concept. He's going to have a great credibility book because he's got a great deal on there. His next deal, he's going to be able to raise capital and he's going to be able to scale up. So, congratulations to Branton on the deal.
Thanks. And I will say, I'll throw in real quick, I know we're pushing up against time. Know when you've reached the limit of your available resources and then make the next step. Anyone who's played sports, sometimes the best matches or games or you ever play, you ultimately lose, but you're playing up to a better team's or a better opponent's game. You're playing up to their game. And I knew I had reached a point where it was time to find a mentorship program. And I got involved with you guys because I needed access to somebody who truly knew more than me. And you're not going to get all that in the public free forum because it doesn't sell books or necessarily. It's the nitty gritty of the behind the curtain,
That's right.
Josh is knocking down in the background. So I would encourage people to step up and know when it's time to find someone who knows more than you and go seek that knowledge.
Thanks.
Well said. Hey, Branton, how can the listeners get a hold of you?
Absolutely. More than welcome. I love, every time I hear a podcast, I'm the guy that reaches out, if they put their number or email out there, so I'm going to do the same. I reach out and network. We'll make sure it's in the show notes. My first name, Branton, B as in boy, RANT as in Tom, ON @ AOM-E.com. And definitely email me. We're working on a website. We're working on a credibility book. We kind of went the real estate route, and then we had to come back and say, you know what, we should probably do some business cards. So we're building that out now, but definitely email me. I love talking to people that are ahead of me, behind me, wherever it is in the process, and hopefully push across the finish line together.
Boom. Guys, I want to thank Branton for being an amazing guest on the show and sharing his movers and shakers story. If you want to be the next movers and shakers guest, email us, josh@jakeandgino.com. Now, if you like the show, please leave us a review. And until next time, let's make it a movers and shakers week. See you guys.
Take care, everybody. Thanks, Branton.
Have a good one, guys.